Welcome back to another episode of Business Perfect Formula. I'm your host, Sarah, and today we have a very special guest joining us. I'm excited to welcome Dominic Gerasi, a seasoned expert from one of our funding partners that aids our clients with business funding. Dominic brings us a wealth of knowledge and expertise in the world of business funding, and he's here to share valuable insights that can help you navigate the often complex landscape of securing financial support for your business. In this episode, we'll dive into the various methods of business funding, from traditional loans to innovative financing options. Dominic will walk us through the pros and cons of each method, provide tips on how to improve your chances of approval, and discuss what lenders are really looking for when evaluating a business for funding. Whether you're a startup just looking to get off the ground, an established business aiming to expand, or somewhere in between, this episode is packed with practical advice to help you make informed decisions about your financial future. So grab a cup of coffee, get comfortable, and join us as we explore the world of business funding with Dominic. Let's get started. Welcome, Dominic.
Thank you for having me, Sarah.
You are,
Very excited to do this.
and I'm too. I love having you on here because I feel like we are pulling back the veil and exposing this very unknown world of business funding that most people are completely unaware of. So this is one of the most valuable episodes in my opinion because it's helping people understand that you don't just have to go to the bank to get funding. There's so many other great options out there to help you. So thank you.
Happy to be here and can't wait to talk about it and bring some awareness to some of the other programs that are out there.
Absolutely. Well, let's get it out of the way because Dominic, I'll be honest, I don't even know this story. You know, you and I are both in the funding world, which is questionable by some people at times. It's not everybody's first choice of occupation, but I love it. I know you love it. I'd love to hear, how did you get started? How did you end up where you are, and what did that journey look like for you?
Yeah, no, it's great. As far as myself, I came from the mortgage industry when I was much younger. I was like 20 years old, and I entered the mortgage industry during really when right before the 0809 crash. So I had a unique at a young age. I got
Hmm.
kind of unique perspective on like the highs of lows of what the economy could look like on like a large scale too. Um, and then had some other jobs, had a pharmaceutical sales job in the middle, and then yeah, the world of business financing I found, and I found it very interesting. And then my story kind of lines up with our CEO story, and we never met until we were at the company, until I got hired at this company. But Joe, our CEO, he started in the mortgage industry right around the same time as me. We're the same age,
Wow.
and we both went through the 0809 crash. And while that crash was happening, that's when he started National. So National kind of got started in a really rocky time. So me and him have
Hmm.
some good stories, and we're able to like really like we lived the same thing. Just we didn't know each other yet.
Yeah.
But so National kind of came out from him working in the mortgage industry. Because what happened, at that time, he was doing mortgages, and he was doing residential mortgages, and he was getting a ton of business owners, and they were coming to him, and they were looking to borrow money against their personal residence for their business. And he always goes to there's one specific client that he remembers. It was a catering hall. They owned like a really large catering hall, and they couldn't get funding. And the gentleman was borrowing against, he had a very nice house. It was like $1 million, multi-million dollar house. And he wanted to take money against the house to, use it for the catering hall. And Joe was like, well, why are you taking money against your personal property? Like, why aren't you using the business? And he's like, the business owner is just like, I can't use the business. I've tried. I have a hard time. So Joe kind of went on like a mission to find this gentleman business funding
Huh.
rather than using his commercial mortgage, and that's how National was kind of formed.
Wow.
Because in the mortgage industry, it was really easy to really like we had marketplaces, right? We had 50 different banks, and somebody would come to you, and you were able to bring them to all these different banks and get all the different offers. And there was really nothing like that on the business side,
Right.
on the business loan side. So Joe's vision was to bring that to the business world, and that's what we've really tried to do here at
Wow.
National.
You've done it very well, and I love that we're partnered with you guys because you guys what you do is unique. And if you don't mind, you know, dive into what is national. Like, what do you guys do? I mean, period. What do you guys do? How is it a little bit unique than just, for example, going to the bank and getting a loan? What sets you guys apart?
So National Business Capital is a marketplace of all different business financing options. So that's where it sets us apart from going to the bank or any really traditional lender. Um, there's a lot of different options with National. We're able to bring somebody to traditional lending, or we're able to place them with asset-based lending. We can help them with equipment financing. We can help them with the revenue-based products. So really we can help all different businesses based on really any of their scenarios. The one scenario that we're unable to help is startup business. That's where it becomes really challenging, is to help startup funding. But we help all businesses that are all in all different stages, right? You can just be really like expanding to your 10th employee. You can be expanding to your 500th employee. And we're helping at really all different levels.
You do, and I'm curious. I've seen it, but I know you can't tell over the listening what your guys' approach is. But I find that you guys have a unique approach. A client comes to you, you don't just say, "Oh, here, this is what you have." I find you go through all the different options. You try to find the best fit, which I know you're used to it. It's what you do day in and day out, but not most places don't do that, right? It's here you go, this is what you get. If you don't mind diving into a little bit about, how you take that approach with clients.
Absolutely. Yeah, and for business owners, we take really the help first approach, and we really truly take a help first approach. We want to understand the situation, what's going on in the business, and how financing is going to help the business and what that time frame looks like, and really try to understand so that we can understand which product is best for a business owner. Because a lot of times a business owner will come in and they'll say, "Hey, I want a line of credit," and is a line of credit the best product for you based on your use case, right? You may be doing a renovation that's going to take 12 months. Well, we probably should put that on a term loan and keep a line of credit for backup rather than use your whole line of credit to do a renovation. So, we really want to understand what the what the cost is going to look like, what the ROI of the project is going to look like, and really understand that so we can make sure you get the best products. Sometimes, somebody will request a line of credit, but they're really looking to buy a piece of equipment. No, it's not. Let's give you a line of credit. Absolutely. You still can get a line of credit, but let's buy the equipment with equipment financing, right? Over 5 years, where you can depreciate it and get tax benefits, and then you could still get a line of credit, but that's not how you should buy your piece of equipment.
Right.
But if you don't understand how the money's being used, it's really hard to educate and help guide and advise. So we take a help first approach. We never really if it doesn't make sense, we're going to be like the first ones to say, like, based on what you told me, I don't know that this does make sense. And I think that's where our reviews come from. Like, if that's we have great reviews. There's thousands of them. We're a 5-star company, and in this industry, it's hard to really be a 5-star company. But we take a lot of pride in the customer experience, the partner experience, and just everybody that interacts with us. We take a lot of pride in them being happy more than closing a transaction.
Absolutely, which is why we partner with you guys. That's our approach too. But I do want to say in this space, and I'm not just trying to pat you guys on the back. It's very hard to find that. Most brokers, lenders, whatever, they don't take that approach. It's what can make us the most money, and let's just put the client into that, whether it's the right fit or not. And I know you don't see it because you're with National and you guys just do things the right way, but we see it, from lenders that approach us, different groups that approach us, and also the horror stories of clients that come to us. It's there is a lot of that, unfortunately, in the industry, which then leads to a lot of people distrusting us. But I feel like between your company and our company, and obviously others, we're slowly, putting a dent in that and changing people's mind about the funding process. So slowly.
Yeah, and I've heard my fair share of horror stories as
Oof,
well. And I would never want to be somebody's horror story.
I
And
know.
so
Totally.
it's we want to help. We really take that help approach.
Mm-hmm.
And by doing that, we're incredibly busy, right? So,
Yeah.
we're not relying on one or two transactions to make or break us where we're like high pressure salesing a client. It's
Mhm.
we're presenting options, we're making sure that it makes sense. And if it doesn't make sense, well, we're here for next time, or we're here for the next
Mhm.
time something comes up, rather than like it has to be right now. We definitely don't operate like some of our competition does.
Right, absolutely. And also, kind of piggybacking on that as well, and how you guys do things. A lot of people are scared of taking on funding. They're scared of the process, whether it's bad experiences or just preconceived notions. But I feel like because you guys take that help first approach, it takes away that fear factor right away. I find that it's not so scary to borrow money when you have someone treating you that way. At least that's my opinion from what I've observed anyway. Just I don't know about you, but I get a lot of people that are just scared, and it is a scary process. But
Yeah, I think borrowing is always scary, right?
yeah,
When you buy your first house and you enter a mortgage,
oh,
everybody's scared, and so it's borrowing money is a scary process, and you want to make sure you're doing the right thing, and you're making a wise decision.
true.
So you can't rush it, and you got to make sure it makes sense, and you got to talk through it.
Yeah.
So if that doesn't happen, it's hard to trust, right? Oh yeah, take this money,
Right.
but you don't understand that they really should. It's so that part of it's definitely very interesting.
Absolutely. So, Dominic, I'm curious, what would you say some of the key factors are that determine what type of funding is best suited for a specific business?
I mean, it's always going to start with, I'm sorry, it's always going to start with what they qualify for.
Hmm.
So, business lending, it's kind of different levels to it. At the bank, going to the bank and getting lending from the bank is going to be the most prestigious, but it's going to be, hands down the hardest to qualify for, right? You have to, have your depository relationship there typically. They're going to usually want a blanket lien on all assets for the business. And they're generally conservative on dollar amount. So you kind of pledge everything for um, maybe a smaller amount of money than you can get in the alternative markets, but it's without a doubt going to be your best rate, right? You get in bank financing, and
Sure.
it's going to be the best rate out there. Um, but it's just really hard to qualify for. You have to be profitable. You have to be a couple of years time in business, show profitability, cover your debt service coverage ratio. You may have to sign a personal guarantee. You may have to provide personal financial statements. You may have to show life insurance. It's very
It's a lot.
interesting, like some of the things that the bank asks for. They want to be incredibly secure when they give you the financing, that if something went wrong, they can recoup it from all different avenues
Mhm.
usually. So, at the bank, you got to show a lot of collateral, you know, and then if you move into the alternative market, there's competitors to the bank, and they're typically a little bit more flexible as far as like credit profile. You don't have to have your depository account at a new bank. You can keep your current banking relationship, and still, if you didn't get lending from your current banking relationship, you can leverage your assets, being receivables or inventory, or really a combination of the two, and sometimes even include real estate, and then get a line of credit against your assets in the alternative
Mhm.
markets. There's equity financing, so you can give up pieces of your business to leverage and take in funds, but sometimes that could be rather expensive if you're in the early stages and you have a great business plan, and you're selling you're selling portions of the company for
Mhm.
for money. So that gets interesting, but that's out there. And then there's this whole world of alternative financing that's really revenue based,
Mhm.
and they're revenue based term loans and revenue based lines of credit, and just really different revenue based financing where there isn't an asset attached. The asset is really the business, where the health of the business, and the lending is to the business based on cash flow and health, right? Just, balances in the account, and where it's really for the, it's really designed for the business that doesn't have strong assets, and they can't leverage their assets. And they may sell B2C, and they don't hold a ton of inventory, and they have a great business. And you have to be super profitable to take equity financing,
Mhm.
or because the equity groups only want to invest into profitable companies.
Yep.
So unless you're, some got awesome tech and they see real big profitability down the road. So if there's not if you're prior to being profitable, or if you're just at that break even point and you're really in growth mode, it's hard to go to the bank without assets because the profitability is not there. So the revenue-based world more understands the profitability might not be there yet, but you're on a path to profitability. You're on a road to profitability, that you're in growth mode. We're going to get to profitability, but I have to spend all this stuff to get there. And that's a lot of time the business owner that we're helping is the ones that are on like the path to profitability, right? And once they graduate or grow into bank financing, we happily will, move them to the bank. But if the bank's not available, we have all the best options
Yeah.
outside of the bank.
And let's dive into revenue based funding for a minute because I know that's a big piece of what you guys do. And I'll be honest, I love it. I love the simplicity. What is required for from a business perspective? What's required for revenue based funding? Are they having to provide years and years of tax returns and give you their firstborn child, or how simple is it?
It depends. It's as the dollar amounts go up,
Sure.
because we go up to 5 million, completely unsecured, and can sometimes even go over that. We've made exceptions to go up into like 8 million. Um, so we can get up to really large dollar amounts without taking assets, no real estate, no receivables, no inventory, right? So you're talking about really $5 million of almost unsecured funding. It is secured by the business, but it's uncollateralized. It's not collateralized by a physical, tangible asset. So that gets very interesting. We go up to really large dollar amounts. So if the request is more than like $250,000, they're going to want to see like financials and tax returns, and it makes we're starting to get into larger dollar amounts. But for under $250,000, 100,000, 150,000, 70,000, some of the smaller amounts, it's really simple on the like the documentation. It's really just 6 months of bank statements,
Mhm.
and they're not even collecting a tax return and financials. So profitability isn't, it's getting looked at through the bank statements. You could see the health, but it's not really getting, analyzed as heavy as where, if it's $1 million transaction,
Right.
they're getting underwritten a little differently, where they're looking at the financials. They want to understand where your receivables are coming from, where your payables are. So but yeah, that's very limited documentation. Just really bank statements up until $250,000, and after that, we provide a little bit more.
And it's a much faster process than traditional through the bank with something like, let's just say it's a $50,000 line of credit revenue based. How fast could something like that go?
Oh, a client can apply if they're motivated, and they send us everything that we need. They can receive their approval same day, and get issued their line of credit by the end of the day. So it can be as fast as like 8 hours,
Wow.
start to finish. Typically, it'll go, a couple days, just because of how things work. But if somebody applies and like, yeah, I want that, we can make that happen same day.
Jeez, that's a lifesaver. And for revenue based funding, is there a certain credit score requirement, or what do we look at there?
There's different tiers. So there's different tiers to revenue-based financing. There's like an A, B, C, and like let's call it a D tier. So the A tier, there are lines of credit, there's term loans, there's unbelievable programs that are very similar to the bank at a slightly higher cost. But what the program you're getting is awesome. And that, those are reserved for typically 600 or 650 plus on the personal credit side, because personal credit is checked, but it is not the number one factor. The number one factor is the health of the business. They're looking at how much money's coming in, how much money's going out, what's the average daily balances, what are there negative days, are there any fees in the account? How many different deposits do you get from different credit, from different either customers, or where's the money coming from, who you're paying. So they're really looking at that equation, those equations in the bank account, and obviously doing that through a lot of software. And that's how the approvals are generated. But there are credit minimums on the personal side to prove that you deserve this program on the business side. So term loans, lines of credit, the minimum is, we have different programs. So, some of them are 600, some of them are like 620, some of them are 650. So right in that, like, 600 plus range, everything really kind of opens up to you on the revenue side. And then if you're sub 600, there are still revenue-based products. You're just gonna or if even if you have a great credit score, and you could be a 700 credit score but have negative days in the bank account, and some NSF fees and not as healthy cash flow, and you're probably fall into like the BCD tiers. And that's 500 minimum credit, and they do allow for some cash flow challenges. And the risk and the pricing just is associated, right?
Right.
A tier is going to get the best pricing, B tier is going to get a step lower on the pricing, and it just works its way down as the risk score goes up.
No, absolutely. And that's the piece that I think people don't understand. And as far as revenue-based funding, is there, are you guys able to help all industries? Is there any sort of industry restrictions?
Yeah, it's really industry agnostic. There's a couple of industries that have some restrictions, where you may have to just be a little bit larger of a business. Auto sales is sometimes tough because they have financing in place a lot of times with a floor plan. The adult industries is tough. The anything around weapons and ammunition is not the easiest. So those would really probably be the only three that we would stay away from. But also to talk about the industries, we're probably helping all the time. We do a lot with the construction industry, different trades where they're waiting on receivables, and they have to buy materials, and they have to pay their team, and they have this upcoming job, and if this receivable doesn't come in, I can't start this job because I didn't buy the material yet. And those, a lot of times, those where a line of credit really helps. We help medical businesses all the time expand their practices or hire additional physicians for their current practice to just grow their revenue. um, E-commerce and retail, anything around selling products, buying inventory. We help business owners get more inventory where they can, sell that inventory. A lot of times they could be waiting on receivables from a big box retailer. They could be waiting on receivables from, maybe smaller retailers that they sell to, or they sell, direct to customer, and they don't hold a lot of product. And, the more product they have, the more product they can make. So, all different phases there. So we're really helping all different businesses for all different types of reasons. And then the best part about national is we bring the market to the customer, right? So we're not, we're not, we're listening to the story, we're understanding what might make the most sense, and then we're bringing multiple options to the customer. So we may present a term loan and a line of credit. You may be able to take both in combination. So it's every business is different, and they all, if you just had went straight to one lender, you may not have the best program for you. Where we can make sure that you're getting the best program, a combination of programs. You can get equipment financing on a line of credit, term loan on a line of credit, and really finance the whole business.
Which makes you guys like the superheroes. You can help so many. And one that I get asked about a lot, because it's a unique one, is what about the cannabis industry?
Cannabis industry has gotten tougher. We still finance cannabis companies, and we can help cannabis. they're just with the growth in the industry and the competition, margins have really
Yes.
gotten really thin. So the industry itself, as much as it looks to be like thriving and expanding, which it is, their margins are shrinking, like, and shrinking rapidly because of the competition. So it's become harder to finance them because the money still needs to make sense, and everybody needs to win. The business owner needs to win. So as their margins are shrinking, it's harder to underwrite and have that make sense. Where they were operating on 40 to 50% margins, where I've talked to some where their margins are down to like 15 to 20%, which
Whew.
it's a tough margin. Those are tough margins to work on.
Absolutely. But I mean, it is still promising. I mean, because a lot of times they just get the doors shut in their face. So to know that there is even potential of help is still encouraging. In your expert opinion, are there any potential risks associated with perhaps alternative business funding as opposed to traditional bank?
I wouldn't say there's additional risk, um, because at the as long as if you're gonna repay, you can go to either place, right? The bank or alternative financing. If you're gonna repay, there's no risk, right? It's just repayment. Um, with the bank, if things went wrong, sometimes they have a blanket lien on a lot of your stuff, where your personal property possibly, and where they do have the ability to essentially go after those things to make themselves whole. Where in alternative lending, it's a performance guarantee against the business.
Right.
So if things truly, unfortunately went bad and the business was struggling, we don't have assets we can go and recoup,
Right.
right? We're not able to come after the assets. We're in it together. As like the lender's kind of in it together with the business owner, because there's no assets to recoup. They're the lender's rooting for the business owner to
Right.
do great. Because if they don't do great, the lender's money is at jeopardy, the business is at jeopardy. So the underwriting, they do underwrite, and they want to make sure that the money makes sense. They want to understand how the money's being used, because if things don't go right, that's not ideal for anybody. The
No.
business owner, the lender, really anybody in the situation.
Absolutely. I mean, I'll be honest. I find that it's a much better way of going, but that's my personal opinion from personal experience in helping business owners. So, yeah,
Some business owners, if it's all about cost and the
yeah,
bank's available, you're going to go to the bank, right?
right,
If it's all about the cost, you'll work with the bank if the bank is available.
right,
But there are business owners that will pay 2 to 3% higher
correct,
for service.
correct,
And you will get sometimes better service with the alternative lenders
absolutely,
than the traditional banks. So
absolutely.
that's one thing to keep in mind is nobody's ever going to be as cheap as the bank, but sometimes you can get a little bit better service and a little bit more.
Absolutely, and the process is just a lot easier. I mean, I certainly, we both know, nothing, no shame against bank loans or even traditional SBA loans, which I know you guys can help with, but you've seen the document request needs for those. They're tremendous compared to if you do just a simple revenue based line of credit, 6 months business bank statements. It doesn't even compare in my mind, but that's.
Yeah, and cost wise, that's what's gotten interesting over the last couple of years. Cost has gotten very close from like right now an SBA loan is at prime plus 2.75 with most banks, right? So you're at a little over 11% on an SBA loan. Then if you're leveraging your assets with the bank, it's same thing. It's right around 10%, or could range into the low. At the bank, it's going to be right around 10%. In the alternative markets, you can get 13 to 15% with leveraging your assets. So effectively, you are going to be a couple percent higher outside of the bank. But then then a lot of the service that you're going to get is very different, because banks are very focused on 10 million plus, right? Like they want to lend the number of 10 million plus. They just they don't want to underwrite $1 million on a transaction, and and sometimes your community banks I would will more than the big banks. The big banks are really looking to be at those big numbers.
Right.
And it's also about bandwidth. They don't have the bandwidth to underwrite all of these smaller transactions. So they're lending blocks of money to the alternative markets to really re-lend out, right? Because all those lenders, they all have lines of credit, and those it's all coming from banks. So really the alternative market is lending the banks money at a little bit higher rate. And they're doing the underwriting.
Yeah. No, it's an amazing process for sure. I'm curious on your thoughts. Is there anything a business owner could do to prepare, for example, to make their business more attractive to lenders, you know, whether it's, revenue-based funding, term loan, line of credit, is there anything they could do to prepare?
Yeah, I'd say two things are very important. One is that your account looks as healthy as it should. We'll work with clients, and they'll be, through the process, you may have to do a bank verification where it's like a live look in to your account where it's secure. And there'll be, come back and there'll be like $1,000 in the account. And then we'll reach out to the business owners like, there's only there's only 1,000 in the account right now. What's going on? I got two checks on my desk, 20,000 and 25,000. And yeah, so you're carrying a balance in your bank account for 3 days at a low number, but you have two checks sitting on your desk that you need to deposit for almost $50,000, right? But on paper, that does it looks like you didn't have money for 3 days, right? So those things, I mean, come up a lot where it's almost like an honest mistake, and then when you go to apply, you didn't realize, right? Like you didn't realize then, oh, I should make my deposits as soon as I get them every single time. So we see that, right? We'll see, just like kind of being prepared, right? It's what you look like on paper, right? So it's, you want your account to look as healthy as possible, and you want your personal credit to look as healthy as possible. So, right, if you have current latenesses on your home, or if you have current latenesses on your car, and now you're looking for business financing, that doesn't look great either, right? So it's on paper, you want to look good, right? Or as best as you can within your control. And then I would say the second piece is on, have a plan, have a real business plan, and understand how this is good, how the money is going to make the business better, right? Hey, I'm looking to borrow 100,000. I'm going to take this 100,000. I'm going to do this, this, and this. When I do this, this, and this, and this is going to happen, and this is what that looks like. We need to understand that. The underwriter needs to understand that, because this is customized financing, right? The approvals are like tailored to the needs a lot of the time, where we can go back and alter them based on, hey, well, I know you might have only approved for 12 months, but we really need 18 months because the renovation is not going to be finished for 12 months. And, they're not going to start seeing revenue really until that 9th month. But if I don't have that information, I can't alter an approval. So, the business owners have a good plan, understand how to communicate your plan with us. And then, sometimes you have to talk to the underwriting teams as well, the actual underwriters that are determining your approval, right? We'll set up an underwriter call where the underwriter wants us to speak to the business, and that business is getting judged based on their answers. And on the fly, there's like wiggle room of maybe $50,000 that underwriter is like, if this person's well spoken and they have everything together and they really know what they're going to do, I can go up to 150,000. If they bomb the call, I might just pull the approval because I don't trust the money here. Or I may just be very conservative and do 100,000 because they said they were expanding, said they were hiring, but they didn't know their numbers, right? I'm going to pay. I don't know what I'm going to pay them. I don't know what I'm going to make, but I'm going to do it. So, have your business plan together, have your opportunity, understand your own opportunity, and be able to communicate it. That's very, very important. Where it matters. It really matters, and it changes your approval amounts sometimes, because some of our lenders are storied where they'll look at everything on paper, but they'll also listen to a story. Right. I'll give you a good example. This is a good one that we're currently working on, but it's an interesting business because they do $25 million annually, but they're currently showing a $2 million loss for the year. Right, so significant loss, a
Wow.
big loss. But there's a reason, right? They've been around a long time, and they explained it all to us, and we understood the reason, right? So I'll give you a little preview of it. Was um they do 25 million annually, and through COVID, the product that they had went like 3x in price. So how can I get more of this? How can I expand? I need more people.
Yeah.
My product just went 3x, right? So they go into expansion mode, they start opening new locations, they start a big hiring plan, and then pull back, right? The pullback happens. And product is no longer 3x. The demand isn't as high as they thought it was going to be. And now this big expansion has to really be put on pause, and the whole hiring plan kind of has to be put on pause. But it's been created a big spend, right? They've opened new locations, and they have people, and there's a big spend there. So this is typically a very profitable company. This year, they're not profitable, and they're probably not going to be profitable this year for the year, but they're going to be profitable again next year, and we're confident they'll be profitable again next year. So that business, we were able to have them approved for, I think it's 1.5. We
Wow.
have them approved for $1.5 million, to help them get through this time, right? Something happened in the business completely unexpected. At first, it was an opportunity. Now it turned into a challenge.
Hmm.
And we're helping them get through that challenge and get back to where the business has always been. So that's one that's a very interesting one,
Yeah.
because the bank, no way,
Nope.
no chance. They don't have a ton of assets, right? So they're not asset heavy. So they need revenue based financing, and based on what they look like on paper, decline,
Yeah.
like no way, right? There needs to be a story behind that,
That's
because
awesome.
on paper you look like a business that's going out of business.
Right.
But they're not going out of business. They try to expand, and things happen, and they know they have to pull back, and they have a plan in place, and they feel like they can be profitable again by next year Q1.
Wow.
And we do too, based on what they said, right? So that's that's a lot of times where we're helping too, is
Yeah.
situation like that.
I love that. I absolutely love that. And I bet they'll love you forever for that. You're the heroes on that one. And I mean, along those lines, I know that's an awesome success story. Is there a particular client story that sticks out to you from all your years at National?
My my favorite one, and this was a client. This is when I was the financing advisor, and I helped this client myself get financing. But this was definitely my favorite one. It was just because it was such an interesting business. And I remember I stayed on the phone with almost 2 hours just understanding the business, and I just was so interested. They bought shipping containers, and they converted shipping containers into swimming pools.
What?
And also they converted swimming containers into, they would like flip them over and put doors on them, and they would rent them for like weekend events, where like there'd be like one of the like a carnival,
Oh,
or
cool.
like a fest,
Yeah.
like any kind of fest, and they would these metal structures where they had doors, and you could put your product and sell your product all weekend, but at night you could lock them.
Wow.
So they would take these shipping containers, and they would buy them. I think at the time, I think they were like 5,000 or whatever it was, which I'm sure it's way higher now. And they were converting them into pools, into like, I believe they were doing that in Arizona, and then they were also using them for this other use. So it was just super cool business. I was like, wow, that's very interesting, and I just
That's
wanted to
awesome.
understand everything about it.
And were you able to get them funded?
Yeah, absolutely.
Okay.
Yeah,
That's awesome.
yeah, because that was one of the situations where it's just like shipping containers are a lot of money, and
Yeah.
I have to buy them. I have to do the work on these containers, right? I have to either convert them into pools, or I have to convert them into these like basically tents, these metal
Mhm.
tents. Um, and you laid out, whatever it was at the I don't know what a shipping container is now. It's probably 10,000 or more. But if you had to buy, let's say 10 of them, that's $100,000. Then you have to do all this work. You have to pay people to do the work. The work might take 30, 60 days, whatever number that looks like, right? And then I have to deliver the product, and then I have to get paid on the product. So there might be 90 to 120 days where you're laying out, $100,000 for 10 containers, right? And if I had 20 containers, I could sell the 20 containers. Well, let's get you an extra 10, right? Or whatever that looks like. So I forget what the exact numbers were. But that was one of my favorite ones.
I like that one. That's really cool. It's a great idea. I love it when people are creative and have these unusual business ideas. It's always fascinating. Dominic, obviously you enjoy what you do. It radiates out of you. It's easy to tell in talking with you. I'd love to hear from you. What is it that you enjoy about working at National and what you're doing?
I love working at National because we take that help first approach. Where I wouldn't love doing this if I worked for some of my competition. And I know that just because of how they operate, and it's dishonest in some ways. Where we completely we do the right thing every time, and we make sure the customers are happy. And we try our best to make sure they get the best product out there in the whole market. And what we do is they couldn't do it for themselves. They wouldn't know where to start, which lender to go to. Some lenders love restaurants, some lenders love construction, some lenders, right? In our it gets a lot with the industry, because the lender, if they don't understand the industry, they have a hard time understanding how the money flows.
Right.
So some lenders, we help all industries because we have all different sets of lenders. But we have some lenders that are specific to restaurants, specific to medical. They have specific programs for specific industries because they truly understand that industry, and they want to lend in that industry because that's their expertise. So that's where I think it's awesome, is that we're able to bring all these different products to a business owner that they don't even know are out there and they couldn't find for themselves.
It's gratifying. I
Yeah,
think
it is.
it is, and you're
Even
truly
even
helping.
even right before I came in this room to have a conversation with you today, I was just in a meeting talking about a transaction that we're hopefully going to finance today or tomorrow. It's a $1.2 million transaction. We're in competition. We're 17% cheaper than the competition,
Wow.
and the business owner was going to take the other deal, and that's on $1.2 million, right? So on $1.2 million, that's $170,000 cheaper
Wow.
over the course of 12 months.
Whew. I hope he doesn't. I hope he's smart and goes with you. That's a huge difference.
They are right. It was a good story, and it
Yeah.
came through my channel. That's why I was in the conversation.
That's
But
awesome.
yeah, if they didn't get introduced to National, that business owner, he has a great opportunity. So he would have taken the money at a much higher rate,
Wow.
because the opportunity still outweighs the cost,
Yep.
but our cost is way better than the competition, because
Absolutely.
we have access to a program that our competition doesn't.
Yeah. Wow. That's awesome to hear. I love that. Uh, I mean, I could keep asking you questions all day, but I know at some point you got to go home. Um, I am curious though. We did cover a lot. Is there anything in closing, anything else that you feel like would be helpful for business owners to know about the alternative funding world and what you guys do?
Um, it's a great question, and we covered so
I
much.
know.
You asked me so many good
I
questions.
know.
So anything additional I want to add? I mean, maybe just going back to the where you said, it's scary to take financing. And It is, and it could be depending on who you're working with, and that's where knowing who you work with. A lot of times you're working with somebody over the phone for this, right? This
Yep.
is over the phone transaction.
Yep.
We happily jump on Zoom, and we're all in the office, and we work in a beautiful office, and we have great reviews, and we're very proud of who we are. So we ask people to look us up. We ask people to know who they're working with.
Mhm.
I think that's the key, is to know who you're working with.
Yes.
And that's what I've learned is, if you don't know who you're working with, and if you're not working with the right person, it could be a horror show. It could be extremely more expensive, right? That one example I just gave you, like, that's a significant difference. That is, like,
Yeah.
significant difference. So that would be the key, to me, is this. If you're working with a bank, if you're working with an alternative lender, if you're working with an asset-based lender, if you can't find them, and they can't find them online, and you can't find the reviews about them, and it's 2024 and they don't have any kind of presence, I don't know that I would work with them.
Mhm.
And that would be my biggest. We're not the only great company out there. There's other great companies out there in our space, but you can find all of us, right? We all have great
Right.
reviews, and we're all online, and we answer the phone when you call, and we want to talk to you. So I think that's the biggest key to a business owner, is be safe. This is financing. Remember this financing, and take value in who you work with. We take value in the service we provide. And then we've heard 100 times, wow, it was a breath of fresh air to work with National, from people that have worked with the competition prior. So you could have a bad experience, just like anything in life, if you don't work with the right people.
Absolutely. Thank you, because what's funny, you covered exactly what I was thinking I forgot to ask, which was kind of what are some red flags and kind of what to watch out for. So you answered it for me. So thank you, because that is a big one in our space. Absolutely. Well, thank you. I appreciate your time, your expertise, everything. And just thank you for sharing everything you did all about business funding today. I'm sure you opened up a lot of people's eyes to this alternative funding world that we both live in. And, I appreciate that you helped us understand the nuances of both traditional and alternative funding methods, as well as, how to know when it's the right time to borrow money, what some red flags are. And, I hope this discussion, if you're listening, I hope that this discussion has inspired and informed you, and it's given you the confidence to explore the best funding options for you and your business. So remember, whether you're a seasoned entrepreneur or just starting out, there's a wealth of resources and support available to help you grow and thrive. Thank you all for tuning into this episode of Business Perfect Formula. If you enjoyed today's discussion, please subscribe, leave a review, and share it with your network. And stay tuned for more episodes where we continue to explore the dynamic world of business and entrepreneurship. So until next time, this is Sarah. And thank you, Dominic. I appreciate it.